What's going on, and welcome back to Infinitrii University of Hustle. I'm Xenji, and today we're going to be exploring two fascinating areas of the financial world: the stock market and cryptocurrency. Over the next few minutes, we're going to be breaking down how each one of them work, the differences, and we're going to discuss some strategies. So let's get started. To begin, it's crucial to understand what financial markets are. These are pretty much platforms where buyers and sellers come together to trade various assets like stocks, bonds, commodities, and even cryptocurrencies. They are also the backbone of our economy, enabling price discovery, liquidity, and capital allocation. They not only reflect economic conditions, but they also drive growth, impacting everything from retirement savings to everyday transactions. So first, let's focus on the stock market. The stock market is a collection of exchanges where shares of publicly traded companies are bought and sold. It provides the company with the opportunity to raise capital, and then it gives us as investors a chance to own a piece of the property, not property, of the company, and potentially earn returns as they grow. So with stocks, you're looking for the company to grow, you're looking for them to be profitable, you're looking for them to not go under. You don't want the company that you're investing in to go under. You're rooting for them to win. Key players here include individual investors, that's us retail investors, then you have institutional investors, then you have brokers, and then exchanges themselves, all working together in a regulated environment to ensure transparency and fairness. Now let's dive into the mechanics of it. Buying and selling stocks can be done through market orders. These are orders that you're buying pretty much at current prices. And then you also have limit orders. This is the maximum price you're willing to pay for certain assets, stock, commodity, whatever. Stock exchanges form the infrastructure of these transactions, providing a regulated, liquid, and transparent marketplace. Understanding these dynamics, supply and demand, market orders versus limit orders, and then the role of exchanges. These are key to making informed investment decisions. All right, let's talk about cryptocurrencies real quick. Cryptocurrencies are digital currencies that use cryptography for security. Unlike traditional currencies issued by central banks, cryptocurrencies operate on decentralized networks powered by the blockchain. What this means is instead of one central authority verifying transactions, they are recorded on a distributed ledger, promoting security, transparency, and global accessibility. Now let's talk about how cryptocurrency works. The process is decentralized and it involves peer to peer transactions. It eliminates the need for banks. New cryptocurrencies are created and transactions are validated through the process of mining, staking, and then you also have proof of space and other algorithms, which involve solving complex math equations and stuff pretty much. Meanwhile, you have digital wallets. These keep your assets secure. You have hardware wallets. They do the same thing. They're actually better than digital wallets. And then you have crypto exchanges, and they're just like traditional exchanges. It's where you trade your cryptocurrencies except for this 24 hours. This technology is not only innovative, but it also is reshaping how we think about money. All right, so let's talk about the differences of the two. When it comes to risk and volatility, with stocks, they're going to be a lot more stable because you can look at different things like company fundamentals and market conditions. So when it comes to the fundamentals, you got their earnings and different things like that. Cryptocurrencies, you can't look at their earnings, so they're going to be a lot more volatile and whatnot. When it comes to regulatory environments, stocks are tightly regulated, whereas cryptocurrency are just now getting a regulatory environment. So they're still evolving. Got to remember, cryptocurrency has only been here for 16 years. And most of that time, a lot of the billionaires have been telling you, hey, not to buy them because they're too risky. They're speculative, they're going to zero. Some of them saying, they're worthless. But now you see a lot of them jumping in. You got ETFs rolling out and different things like that now. So give it more time, you're going to see cryptocurrency become a lot more stable. When it comes to use case and adoption, stocks, you're looking at their tangible assets and their earnings. So that when you're buying those, you have a part ownership in the company. When it comes to cryptocurrencies, you're looking at them more so as a store of value, quick way to send money. Uh, Maybe you want to hide money you're moving. You will use privacy coins for that. Um, and then you have innovation like DeFi, dApps, and stuff like that. Those are the types of things you're going to be investing to when you go into crypto. So it's very different between the two. When you're looking at stocks, you're looking at them. Hey, I'm trying to own a piece of a certain company. And say, for instance, if you buy a lot of iPhones, maybe you want to own Apple. If you buy a lot of, if you shop at Target a lot, maybe you want to own Target. Of course, you don't want to do that for everything because there are some things that grow a lot better than others. Let's look at Nvidia. Nvidia is a very good company when it comes to stocks because they're with AI. AI is kind of a very big thing. You want some Nvidia. So with stocks, you got to be a lot more smarter than just buying, but you still want to everyday things that you buy. If you shop at Target, if you own iPhones, anything like that, of course, drive a Tesla. Of course, you want to own those stocks because it's better to buy the stock than to buy the thing because the stock is going to pay you, whereas the thing is just taking money from you. You get what I'm saying? All right, so now let's look at some investment strategies that differ between the two. Now, when it comes to, and honestly, to me, when I invest in both of them, I use the same strategy for both, to be honest with you, because the things that I'm in with crypto, they're going to be here for 10, 20 years from now. They've already been here for 10 years. So it's like they're going to keep going and whatnot. I already know they keep going. So I can still look at them as a long term play. And then I still have some that I do for short term, which is the same for stocks. I have my long term stocks, which is more so my passive income stocks. And then I have the stocks that I trade and whatnot. And then which is only like two of those. So it just all depends on what you can do, your risk tolerance, and your strategy. It's really all going to boil down to discipline with your strategy. As long as you're consistent and disciplined, your strategy is going to work out for you. Now, it does have to be at least a decent strategy. It can't be just some random thing you just threw out there. It has to be a decent strategy. But as long as you're consistent and you're disciplined, your strategy will work out for you. Now, diversification is good to diversify across different sectors and stuff like that. So let's say you're in stocks. You don't want all your stocks to be in tech. You want to own a little bit of healthcare, a little bit of tech, a little bit of commodities, a little bit of bonds, and different things like that. You want to have it spread out across different things and stuff like that. Just so let's say one sector isn't doing very well, it goes down, but it's not bringing your whole portfolio down with you. So that's why it's good diversifying. It's the same thing with cryptocurrencies. You don't want to have all your cryptocurrencies in like all the same stuff because when there's sentiment for that specific thing, a lot of those cryptocurrencies go down versus other ones. You know what I mean? So it's good. It's very, very good to diversify. You're diversifying your risk. We've gone over that so many times. We will continue to keep going over that. Diversify your risk. Now, when you're looking at market analysis techniques, of course, with stocks, you're looking at fundamentals, their earnings and their financials and stuff like that. And then you also bring the technical with it. With cryptocurrencies, you don't really have fundamentals. The only fundamentals you really have with cryptocurrencies is looking at the white paper, looking at the community, their following on Twitter and stuff like that. That's really all you have to look at when it comes to fundamentals. What you're looking at for them is going to be what are they doing? Are they actually accomplishing the things that they actually have on their roadmap? If they are keep pushing stuff back, do you really want to be in that? You want to be in something where they're executing and they're actually trying to solve a problem. And then you also look at technicals with them too. All right, let's go ahead and do a little recap. We've defined what financial markets are and what roles they play in the economy. We've explored the stock market, how it operates, and focus on the key mechanisms like market orders, limit orders, and exchanges. We dove into the world of cryptocurrency, understanding the decentralized nature, the fundamental role of blockchain. Finally, we highlighted the key differences between stocks and cryptocurrencies. We discussed different strategies you can use, and of course, you have to tailor them to yourself and according to what you're invested in. Staying informed about these markets is essential as they continue to evolve and opening new opportunities for investors. Thank you for joining me today as we dove into what the stock market and cryptocurrencies are. If you found these insights valuable, please hit that like button, subscribe, and share this video with anyone looking to navigate the financial markets. Please also join our Discord community for more real-time insights, discussions, and support on your investment journey. Remember, understanding these markets is your first step to smarter investing and long-term financial success. I'm Xenji, and I'll see you on the next lesson. Peace.